All right, so we're diving into hard inquiries on your credit report today. You know those things that pop up when you apply for a credit card or a loan, and you always kind of wonder like how much are those actually impacting my score? How long do they even stick around? Can you get them removed? All the questions. And luckily, we have articles from Experian, TransUnion, and Equifax to help us break it all down.
It's interesting how much weight I think people put on those inquiries. Like, oh my goodness, I did a hard inquiry, my score is going to be in the dumps.
Yeah.
And it's often. The reality is not that
Yeah.
dramatic.
Okay, let's break down the myths. I'm ready to debunk. So first things first. We need a clear picture like from these agencies. What exactly are they considering a hard inquiry?
So it's really just a signal. It's not like a judgment or anything like that.
Yeah.
But it's a record that a lender has pulled your full credit report because you applied for credit, either a credit card or a loan. And it's really for them to assess like your financial track record before they decide whether or not they're going to lend to you.
So that makes me think if I'm like browsing online for different loan options or something, that's not going to set off any alarm bells. It's really that point where I'm like, okay, I'm submitting an application now.
Yeah, like a lot of those like pre-qualification tools and stuff, the check your rate, that's all soft inquiries, which don't even appear on your report for other lenders to see. They don't affect your score. It's that moment when you're like, yep, I'm in, I'm doing this.
Okay, so the hard inquiry is they're doing their due diligence. So let's get into like the nitty gritty, the impact on the score, because I think that's when everybody's like, oh, hard inquiry, my score.
Yeah.
It's like a scary thing.
Yeah, I think you'll be relieved to know that the impact is pretty minimal. FICO estimates that a single hard inquiry will typically drop your score by less than 5 points.
Less than 5 points. Okay, that's way less scary than I thought.
Right. And on top of that, it's temporary, so you know.
Yeah.
As long as you are managing your credit responsibly, your score is going to bounce back within a few months. Paying your bills on time, keeping your credit utilization low, that's all going to outweigh those minor little blips from the inquiries.
So it's really just a blip. It's not this like train wreck derailment.
Yeah, and there's another layer to this too that's worth pointing out. So you mentioned like browsing for loans. What if you were shopping around for, say, the best mortgage rate? You're going to be applying with a bunch of different lenders, and that could rack up the inquiries.
That's what I was thinking because I'm like, now it sounds like I'm being punished for actually trying to be responsible and like comparison shop.
Right, but the scoring models are kind of smart. Like they get that that's a common thing that people will rate shop, and it's actually a responsible thing. So if you're applying for mortgages, auto loans, or student loans, you're going to take multiple inquiries within a 14 to 45-day window.
Yeah.
And treat it as a single inquiry.
Ugh. That's good to know. So it's not actually hurting you to do that. Well, that's interesting. What about, this is something I've seen recently, like applying even for utilities or cell phone service. I feel like they sneak in those hard inquiries too.
Yeah, that's where it gets a little bit, I don't know if unfair is the right word, but sometimes even like switching utility providers or applying for a new cell phone
Yeah.
can trigger a hard inquiry. It all depends on the company's internal policies and how they assess risk.
I feel like they're everywhere, these hard inquiries. So it makes you wonder, like, in the grand scheme of things, how much weight do they carry?
Yeah, and I
Why?
think, that's an insightful question.
Mm-hmm.
And that's where I think we have to look beyond the surface level understanding of what a hard inquiry is. Like, yes, it is a factor, but in the grand scheme of your credit worthiness,
Yeah.
they're not like the main event. They're more like, I don't know, the background music, not the lead singer.
Okay, so what are lenders really looking at when they are checking out your credit?
So what's really important is that long-term, consistent behavior that's reflected in your credit report. So they're really looking at your payment history. Are you consistently paying your bills on time? They're going to look at your credit utilization ratio. Are you maxing out your credit cards, or are you keeping your balances in check? Those are the things that really move the needle.
So even if you have a few hard inquiries on there,
Well,
if you're solid on those other aspects, that's really what matters.
yeah, those are the things that are really going to show them like, okay, this person is reliable. They're responsible. They can handle credit.
It's the long game, not the short game.
Exactly.
Okay, so we tackled what they are, the impact. We're starting to even get into how it fits in this larger picture of your credit worthiness. But there is so much more to cover. So make sure to stay tuned for part 2, where we're going to talk more about managing hard inquiries and even get into how they can be a red flag for identity theft. So don't go anywhere.
Welcome back. Before we jump into like managing this stuff, it's worth noting that hard inquiries, they can actually linger on your credit report for up to 2 years.
2 years, that seems like a long time.
It is. But the good news is that their impact fades significantly after the first year. So while they're still there, they don't really have as much power to influence your score after that first year.
So it's not like dragging it down for 2 years straight.
Right. It's more like that initial impact is strong,
Yeah.
and then it just kind of dissipates.
Okay, so that's good to know. So
Yeah.
when it comes to managing these things then, especially, if I know I want to apply for a mortgage or a car loan or something, what are some things I can do to, I don't know, to make sure they're not hurting me?
Yeah. So like spacing out your applications can make a difference.
Yeah.
Because you know the scoring models. They like to see responsible credit behavior. So if you're applying for a bunch of credit cards right before you go to apply for a mortgage, it might send like mixed signals.
Yeah, you're saying I'm just browsing, and then the next minute you're like, give me all the credit.
Exactly. So lenders want to see consistency, stability in your financial behavior.
Okay, so if you know a big purchase is coming up, maybe just like chill for a little bit.
Right. Yeah. Just space out those other applications.
Look responsible.
Yeah.
I like that.
So another thing that's important is just being vigilant. Regularly reviewing your credit report is a huge part of managing hard inquiries.
We talked about that a little bit. It's like a financial health checkup, right?
Right. But it's not just about spotting errors or like inaccuracies. It's about being proactive in identifying potential fraud. Because hard inquiries can be a clue.
That's true.
Person's off.
So like if I see a hard inquiry from a company that I've never even heard of.
Yeah. That's a big red flag. It could be a simple error, but it also could mean that someone has used your information to apply for credit without your knowledge.
So that's scary.
Yeah.
But also checking your credit report regularly isn't just about like vanity or whatever. It's about security.
It really is. Like
Yeah.
it's about taking control of your financial identity.
Okay, I like that. Now what about, this is a question I have. What if you see a hard inquiry on there? You know you did authorize it.
Yeah.
But you're like, I wish that wasn't there. Can you get those removed?
Yeah. So unfortunately, removing legitimate inquiries is extremely unlikely because, those inquiries are reflecting actual applications that you made. They're part of your credit history.
Okay, so even if I regret that, like, impulsive store credit card application,
Right.
it's going to stay there.
It probably is. But,
Okay.
remember that a single hard inquiry, even if you wish it wasn't there, it's not going to have a major long-term impact on your score.
Okay, so what matters is the overall, like, trend of your behavior.
Yes, exactly.
So a few hard inquiries here and there are not going to derail my entire financial future.
No, as long as you're focused on those,
Yeah.
foundational elements of good credit.
Like paying my bills on time,
Yes.
keeping my credit utilization in check,
Yes.
building a positive history. Okay. So we talked about it from the perspective of like, okay, you've got a credit history, but what about somebody who's just starting out? They don't have that long history. How do they even begin?
Yeah, that can be a little
Yeah.
daunting, I think. But everybody starts somewhere.
Yeah.
And there are actually a few strategies that can help people build credit responsibly, even if they are starting with a blank slate.
Oh, tell me those secrets.
So one approach is to become an authorized user on a credit card, belonging to like a responsible family member or friend.
So kind of like piggybacking on their good behavior.
Exactly. You're learning by example, showing lenders that you can be trusted with credit.
I like that.
Another option is a secured credit card, which requires a cash deposit. That usually becomes your credit limit. So this minimizes the risk for the lender. And it's a really great way to demonstrate responsible credit use right from the start.
So you're kind of putting some skin in the game,
Exactly.
showing that you're serious.
Exactly.
Okay, so there's hope for the newbies.
Oh, yeah.
Starting out. It takes time, but it's possible. Yes.
Okay, so even if you are new to the credit world, these hard inquiries don't have to be this like big scary monster in the closet.
no, they don't.
You can manage them.
Absolutely.
All right, so we've talked about managing them from both ends of the spectrum. The newbies, the veterans.
Yeah.
But there's one more crucial piece to this puzzle that we've only briefly touched on, and that is the link between hard inquiries and identity theft.
Yeah.
So we know that an inquiry from a company you don't recognize is a red flag. But what are some other things to look out for? What does our research tell us?
All right, so welcome back to the final part of our deep dive on hard inquiries.
Yes.
We've been through a lot, the basics, how to manage them, but let's be real. One of the things that freaks people out the most about hard inquiries is that they can be connected to identity theft.
All right. It's like that little uh-oh moment.
So we know that, like,
Yeah.
if we see an inquiry from a company we've never heard of, that's a red flag. What are some other signs we should be looking out for? Like, What did we learn from Equifax and Experian and TransUnion?
Well, one thing, if you see a sudden drop in your credit score, that's definitely something to pay attention to. Because while those hard inquiries by themselves don't have a huge impact, if your score suddenly takes a nosedive, that could mean that somebody has opened up new accounts in your name. And that's not good.
So it's not just about like monitoring those individual inquiries. It's about really looking at that bigger picture of your overall credit health.
Right. It's like your financial early warning system.
Okay, so what about this? What if you start getting bills or credit card statements for accounts you never opened?
Yeah, that's a pretty clear sign that something's up, that someone has gotten a hold of your personal information and has used it to apply for credit.
Okay.
So that's a very scary thought.
Yeah, it's not a fun situation to be in. But like we said before, knowledge is power. The more you know about these red flags, the better you can protect yourself. So, okay, let's say I've been doing my due diligence. I'm checking my credit report, and then, oh no, there it is. Red flags everywhere. I've got inquiries from companies I don't recognize. My score's dropped. I might even have a bill for something I never opened.
Yeah.
What do I do?
Okay, first thing, don't panic.
Deep breaths.
Deep breaths, because there are steps you can take to fix this.
Okay, give it to me.
First, you need to contact the credit reporting agencies right away. So Equifax, Experian, TransUnion. And you're going to put a fraud alert on your credit reports.
So that basically tells everybody, hey, hold on. Double check things before you give this person any more credit.
Exactly. It's like a big warning sign.
Okay, love it.
Next, you're going to want to file a police report.
Okay, so get the authorities involved.
Yeah. So go to your local law enforcement agency. Tell them what's going on. This is going to create an official record of the identity theft. And it can be really helpful when you're trying to dispute those fraudulent charges or accounts.
So it's all about documentation and leaving a paper trail.
Exactly.
Okay, what else?
And then finally, you're going to want to report the identity theft to the Federal Trade Commission. The FTC has a ton of resources to help you recover from identity theft and prevent further damage.
So 3 things.
Oh, yeah.
Credit bureaus, police, FTC.
Yep.
Got it.
And, it's important to remember, you're not alone in this. Those agencies are there to help you.
Okay, good to know. So, we've come to the end of our deep dive. We've learned about hard inquiries, we've learned about their impact, and we even learned how they can be connected to identity theft. What are some of the big takeaways you want our listeners to walk away with today?
I think the biggest thing is, when it comes to your credit, knowledge is power. So really understanding how these hard inquiries work, what they mean, what they don't mean, that's going to help you make smart decisions and protect your financial well-being.
So we're going from scared and confused to like, I got this.
Yeah, exactly. So hard inquiries.
They're just a normal part of life when you're using credit. They're not necessarily good or bad. It's just about knowing how they fit into everything. And a big part of that is check your credit reports regularly so you know what's going on.
It's like a checkup.
Exactly.
For your finances.
And if you do see those red flags, you know what to do. You know how to take action. And you can protect yourself.
Absolutely.
All right, well, that was a lot of great information. Thank you so much for joining us on this credit adventure. And until next time, stay informed, stay proactive, and stay in control of your financial well-being.